Welcome back to XRP Spotlight, everyone. I hope you're having an amazing day wherever you're watching from. Today, we've got a major update that XRP holders have been anticipating. I told you this would happen, and now the events are unfolding in real time. There's a lot to unpack, from geopolitical tensions impacting markets to the potential final push of the Clarity Act, and how all of this could affect XRP directly. So grab your coffee, settle in, and let's break this down step by step. Before we dive in, don't forget to smash that like button and spread those good vibes. Let's aim for 1,000 likes on this video, and let's get morale up for the week ahead. As of right now, XRP is sitting around $1.14 after a volatile overnight session. There was a sell-off early this morning that coincided with geopolitical developments in the Middle East. The news of missile strikes created a spike in fear across global markets, which naturally rippled into crypto. Bitcoin, Ethereum, and XRP all felt the pressure, each moving in tandem to some degree. While some assets held better than others, the overall sentiment was cautious. And this is exactly the environment where XRP can demonstrate its resilience, not just as a speculative asset, but as part of a larger financial ecosystem. Now, the geopolitical angle is critical. President Trump recently made a statement regarding Israeli-Iranian relations, signaling that ongoing negotiations could still move forward despite the recent military tensions. According to his comments, he believes missile strikes by Iran will not derail the deal with Israel, and oil markets reacted modestly. Prices moved up slightly to $94 per barrel, which is higher than last week but not extreme. For crypto investors, these types of external shocks are important because they affect risk sentiment and liquidity flows in digital markets. The market reaction so far shows a mix of volatility and stabilization. XRP briefly spiked and then corrected, but it is holding above key psychological levels. The broader crypto market mirrored this behavior, with top assets moving together in a coordinated cadence. The Fear and Greed Index reflected this, dropping to 8, signaling extreme fear in the market. That's a level that can be concerning for short-term traders, but for long-term XRP holders, it may signal opportunity. What's happening behind the scenes is even more interesting. We're seeing geopolitical dynamics interact with macroeconomic expectations. CPI and PPI reports are due this week, and institutional investors are positioning themselves accordingly. It's a high-stakes environment where geopolitical news, economic data, and crypto adoption trends collide. XRP is particularly sensitive to these broader developments because it's increasingly integrated into payment infrastructure and institutional financial systems. Now, about the Clarity Act. Senator Loomis recently stated, "The Clarity Act passed committee. The floor is next. We did not come this far to quit at the 5-yard line." This is critical because regulatory clarity for digital assets in the U.S. has been one of the missing pieces preventing full institutional adoption. If the Clarity Act passes in its current form, it could open the door for broader market participation in XRP and other compliant digital assets. The anticipation alone is already creating strategic positioning among investors. From a technical perspective, XRP's current price action is holding above the 200-week SMA. Historically, this has acted as a strong support for long-term holders. While short-term volatility is high, this level provides a reference point for assessing whether the market is stabilizing or if additional downside is likely. Combine this with macroeconomic uncertainty and geopolitical developments, and it becomes clear why this is a critical moment for XRP. Globally, markets are reacting differently. The South Korean and Japanese markets have seen heavier sell-offs following last week's broader market correction. Overnight trading has been mixed, and pre-market activity on Monday morning often sets the tone for the week. For XRP holders, this means staying alert and monitoring both domestic and international market signals. One development worth noting is the progress of the U.S. banking sector in relation to crypto. According to recent reports, JP Morgan, Citibank, Bank of America, and Wells Fargo are planning to launch a tokenized deposit network by 2027. These banks are building blockchain payment rails through clearing houses to prevent deposits from migrating to stablecoins. This could create competition, but also validate the growing role of crypto and tokenized assets in mainstream finance. Reflecting on history, it's worth remembering where XRP was just a few years ago. In 2021, Despite uncertainty in the U.S. regulatory environment, XRP was trading at similar levels. Fast forward to today, adoption, awareness, and infrastructure development have grown dramatically. The environment for institutional participation and retail familiarity with crypto is completely different, which makes the current setup far more promising. Meanwhile, XRP's potential in retirement and investment accounts is drawing attention. Platforms like iTrust Capital allow U.S. investors to hold XRP in IRAs, providing opportunities for tax-advantaged compounding over time. For long-term holders, this is more than just a trading opportunity. It's a potential tool for building generational wealth, even when the price fluctuates around $1. Let's talk market psychology. With geopolitical uncertainty and economic data converging this week, short-term sentiment is likely to swing rapidly. Fear levels are elevated, but historically, such moments have also marked key buying opportunities for those with patience and conviction. XRP, due to its institutional infrastructure integrations and global adoption potential, is particularly positioned to benefit when stability returns. The juxtaposition of high-stakes geopolitics and regulatory clarity makes this a unique week for crypto. Missile activity in the Middle East can create immediate volatility, but it's the underlying adoption trends and institutional positioning that set the stage for long-term market behavior. This is why staying informed and understanding these narratives is critical for serious XRP holders. To summarize, the market is currently navigating uncertainty across multiple layers: geopolitical tensions, macroeconomic indicators, regulatory developments, and market sentiment. XRP is affected by all of these factors simultaneously. Short-term volatility may be intense, but the structural narrative, adoption, regulatory clarity, and integration into financial infrastructure remains strong. This week is a critical juncture for XRP. Watching how the Clarity Act progresses, observing pre-market and international reactions, and monitoring key technical levels will be essential for making informed decisions. While price moves are important, understanding the broader landscape gives XRP holders the insight to see potential opportunities that others might miss. As always, remember this video is for educational and informational purposes only. It is not financial advice. Always do your own research before making investment decisions. XRP is sitting around $1.14. Geopolitical and macro events are in play, and the Clarity Act could provide the catalyst for the next phase of adoption. Stay informed, stay calm, and stay positioned. This is XRP Spotlight, bringing you the stories that matter behind the price charts. Drop your thoughts in the comments. What do you think will happen with XRP this week? And as always, let's make a lot of money together.